Good morning, everyone. I am Sharath. Presently, I am working as a assistant professor in freshman engineering department in St. Martin Engineering College. Today, I am going to discuss about final accounts, preparation of the final accounts, formats for the formats to prepare the final accounts. So, let us discuss about the formats for the final accounts. So, first, the final accounts, the preparation, the basic step is we need to know prepare the accounting procedure. So, what is the accounting procedure? So, how to start the financial statements? So, what is the initial step to prepare the financial statements? The first one is the accounting procedure. In that accounting procedure, the first one is source document. So, what is meant by source document? Here, to prepare the financial statement, the first step is to calculate the financial statement is source document. Here the source document is nothing but the evidence, the proof of the bills, that is called as source document. Suppose for example we are going to any shop or any business, so we are taking any purchases or anything happen, so for that the evidence is called as invoice, bill, or that is called as voucher. Here the first step is called as source document. In that the best example for source document here is called as voucher or invoice, bill. After the source document is collected, and next we need to move to second step, that is called as journal. So what is meant by journal? Journal is nothing but the transactions are recorded in the books of accounts for the first time, then that is called as journal. Journal is also called as day book or book of original entry or book of prime entry. So because the whatever the transactions we have recorded, that first time we are enter into the journal. In journal the transactions are recorded in chronological order, which means one by one, so serial number order. So that is called as journal. So journal is after the preparation of a journal, we need to move to the second step. The next step is called as ledger. So what is meant by ledger means once the transactions are entered in the books of accounts in journal, then we are moved to next step, that is called as ledger. So ledger is also called as posting, which means whatever the transactions are recorded in journal, those transactions will be entered into the in the next step, that is called as ledger, that is called as posting. In ledger the transactions are recorded in analytical order. So the next step we move to after ledger, completion of the ledger, we are moving to next step is trial balance. So what is mean by trial balance? The trial balance here is called as, that is a statement, so which is prepared to know the arithmetical accuracy of the books of accounts. To know the books of accounts are accurately maintained or not maintained, so we need to prepare the trial balance. The trial balance is, it is a statement, and it is prepared for the based on the ledger accounts. So whatever the ledger accounts are prepared, the closing balance of the ledger account balances, we need to move to the trial balance. It's trial balance to know the arithmetical accuracy of the books of accounts, and finally it is a statement. And after that the trial balance, we need to move to the go to financial statement. This is the very important for any financial company or any business. So financial statements is nothing but what are the statements we need to disclose to the public, so that statement is called as financial statements. Here there are many financial statements are there. In that the first one is called as balance sheet. So what is mean by balance sheet? The first statement is called as balance sheet, and the second statement is called as cash flow statement. What is cash flow? And third is called as funds flow statement. Funds flow statement. So these are the financial statements every company or every organization, every business will prepare in terms of their financial transactions. The first step is called as first financial statement is called as balance sheet. In this balance sheet, how the balance sheet is prepared, and what are the liabilities are there, and what are the assets are there. So suppose for example we will take how to prepare the final accounts. The process for the preparation of the final accounts, there are three steps. The final accounts preparation. So how the final accounts are prepared? There are three steps. The first step to calculate the final accounts is called as the trading account. The what is mean by trading account? So trading account is the first step for the preparation of the final account, and second step is called as profit and loss account. So profit and loss account, and every organization will prepare these three steps. So the third one is called as balance sheet. Balance sheet. So today we'll discuss about the trading account, profit and loss account, and balance sheet. By combination of these three steps, then we will get the final accounts for the every organization. So first we will need to prepare trading account. So what is mean by trading account? How the every organization or every company will prepare the trading account? Because every manufacturing company or every factories, they need to prepare the first step is called as trading account. Why the trading account is prepared means to know the gross profit or gross loss. To know the gross profit or gross loss. To know the gross profit or gross loss, then every company or every organization will prepare the trading account. Is the why that there is a pro forma or format to preparation of the trading account, then we will discuss later. So next, why we need to prepare, the second step is called as profit and loss account. What is mean by profit and loss account? Means every office will prepare the profit and loss account. Why we need to prepare the profit and loss account? Means to know the or to compute the net profit. What is mean by net profit? We know, and what to know the net profit or net loss. So to know the net profit or net loss, we need to prepare the profit and loss account. After the preparation of trading account and profit and loss account, whatever the result will be get, that is net profit, the net loss, that will be carry forward to the balance sheet. So why we need to prepare the balance sheet? Every company will having the balance sheet, a balance sheet consisting of the liabilities and assets. So these, whatever the amount we will get in profit and loss account, that amount will be carry forward to the balance sheet. If in case if any organization will earn the net profit, then that net profit will be added to the capital to that company or the organization. If in case if any company will incur the net losses, then the net losses is deducted or subtracted from the capital for that company or business organization. This is the procedure to prepare the formats for the final accounts. So first, today we'll discuss about the trading account. So trading account, the formats are, first we need to prepare the particulars, and next one is amount and particulars and amount. And the left side is called as debit, which is denoted by DR, and right side is called as credit, which is denoted by CR. DR indicates debit side items and CR indicates credit side items. So first you need to prepare the left side items will be start with 2 and the right side items will be start with by. The 2 indicates debit and that by indicates credit. The first item will be appear in the side of trading account. The first one is to opening stock. So every company will start with the some amount of stock. Here the opening stock is nothing but the raw material of the company. The initial stock, whatever the stock is there with the company, that stock is here is called as opening stock. So that opening stock will be treated as a debit side of the trading account. So whatever the amount is there, the opening stock will be right under the debit side of the trading account. And next the item is to purchases. So what is mean by purchases? If in case a organization or every company, then the organization will buy any some amount of goods and services. That amount of goods and services will be recorded as a purchases in the debit side of the trading account. The trading account, the purchase amount can be entered into the debit side of the trading account. If in case after the purchases, if some goods are damaged or some goods are scrap, then that goods will be returned to that company. So that is called as purchase returns. If any item is damaged or scrap, then that will be returned to that main company. So we need to do that. Purchase returns will be subtracted from the purchases, then the final result will be entered into the trading account. And next one is whatever the direct expenses will be recorded in the trading account. So trading account, the direct expense includes what are the direct expenses? The first one is wages. So what is mean by wages? So wages is nothing but the daily basis, whatever the amount will pay to the workers, the daily workers, that is called as wages. The wages amount will be entered in the trading account debit side. But if in case is there any outstanding wages, then we need to add to that wages. What is mean by outstanding? Outstanding means the amount which will be not be paid, we need to pay in future time. So that is called as outstanding. Suppose for example, wages amount is 2000 and there is a outstanding wages of 500 rupees. Then we need to add that outstanding wages of 500 rupees to the wages, then the final result is 2500 will be recorded in the trading account and debit side. If is there any item is outstanding, then we need to add. If any item is prepaid, then we need to subtract from that final item. So then the result will be entered into the debit side of the trading account. And next one is what is happening, and next one is factory rent. What is rent? The rent, whatever the rent amount will be paid by the company in terms of factory, so that amount will be entered into the trading account at debit side. And next one is factory rent, and next one is whatever the to oil and gas and electricity. So whatever the expenses will be related to the factory or manufacturing department, those expenses will be covered under the trading account. These items are appeared in the debit side of the trading account, and whatever the items are appeared in the credit side of the trading account means they start with by sales. So whatever the sales is happened through over the year, that is financial year. Here the financial year is nothing but starts from April 1st and ends with March 31st. This accounting period is called as financial year. In India, every year follows the as per financial sale only, the company will maintain the books of accounts. Here the sales means nothing but whatever the items are sold in the public and various offices, that is called as sales. So suppose for example, before entering the sales, whatever the returns is there, then we need to subtract from the sales. Suppose for example, so let us assume the sales amount is 1 lakh. Suppose assume the sales amount is 1 lakh. In that, if some returns are happened, if some public are given back to that own company or purchasing company, then that returns is we need to subtract. So that here we need to do sales returns minus sales returns. Suppose the sales return amount is 5,000, then we need to do subtraction, and the final amount is called as 95,000 will be entered into the books of accounts as the credit side of the trading account. After entering the sales, then we need to write that by closing stock. What is in by closing stock? Here the closing stock is nothing but after the opening stock and the sales is completed, whatever the stock will be left with the organization or company, that left stock and left goods and services is called as closing stock. That closing stock will be entered in the books of accounts in the trading account as a credit side. So this is the pro forma for the preparation of the trading account. Suppose for example, the credit side items are higher than the debit side items, in each case that will be the organization will end the gross profit. The result is called as gross profit. How we will get the gross profit means the credit side items are high or more than the debit side items. Then in this case only the company or the organization will end the gross profit. Suppose for example gross loss. What is in by gross loss means same like that the debit side items are more than the credit side items. Then in that case the company or the firm will end the by gross loss. So what is in by gross loss means the debit side is more and compared to the credit side. So that is called as gross loss. So this is the preparation of trading account. This is the format to prepare the trading account for any company or any organization. So why we need to prepare trading account means final the result is either the firm will earn gross profit or the firm will incur gross loss. This is why to know the gross profit or gross loss we need to prepare the trading account. And the next step to preparation of final account is the second step is called as, already we have discussed about, that is profit and loss account. Why we need to prepare that profit and loss account means once the preparation of trading account is completed, same pro forma that gross profit or gross loss will carry forward to the profit and loss account. The pro forma for the profit and loss account is particulars and amount, and same like that particulars and amount, and left side out of the items is called as debit and right side of the items is called as credit. And whatever the amount will be entered in the trading account, if in case the firm will earn the gross profit, then the gross profit is transferred carry forward to the credit side of the profit and loss account. Then we will write about here the gross profit. Suppose the firm or the company will incur the gross loss, then it is carry forward to the debit side of the profit and loss account, that is to gross loss. So this is the starting step to preparation of the profit and loss account, which means the trading account result either gross profit or gross loss, which is carry forward to the profit and loss account. And next one is whatever the incomes have earned in the office. These profit and loss account is mainly for the purpose of office purpose. So whatever the incomes, suppose for example by interest received. What is mean by interest? If anybody will be given some amount of money to the public, so the public will pay the at least some amount of interest plus the principal, that is called as interest. The interest received amount will be entered into the profit and loss account credit side. And suppose for example same like that by rent received. What is mean by rent received? Suppose the office will give any rent, any home or any premises to the business purposes, then the premises the company or the firm will receive the rent amount. That amount will be entered into the credit side of the profit and loss account. So that's why it is by rent received. Whatever the incomes earned by the company in terms of office, then those incomes will be entered into the profit and loss account. Suppose for example by commission received. What is in by commission? For doing any service, they need to pay some amount of money to the company or office, then that amount is called as commission. So commission received is also income to the company or organization. That's why it is entered into the credit side of the profit and loss account. Same like that. So by discount received, suppose the company will will purchase or will buy any items, so some other company will give some amount of discount to that company, that is income to that company. So that's why it is entered into the credit side of the profit and loss account. Whatever the incomes will be received by the company, those incomes will be entered into the profit and loss account as a credit side. And what is in by debit side? So debit side, whatever the expenses will be received, will be paid by the company or office, those expenses is covered under the trading profit and loss account debit side. The best example is the salaries. Salaries means whatever the salaries we need to pay to the our employees, so our colleagues, so that amount is called as salaries. So salaries will be expenditure to the company, so that's why it is entered into the profit and loss account debit side. And next one is to salaries. And what is the difference between the salaries and wages? Here you need to know about wages will be paid for daily basis, and whereas salaries will paid to the monthly basis. So that is the main difference to the salaries and wages. And wages will be entered into the books of accounts in trading account debit side, whereas salaries will be entered in the books of accounts profit and loss account debit side. Those two are expenditures only. So next one is to salaries, and next one is to office rent. What is in by office rent? So suppose for example, ABC, assume ABC is a company. The companies take a rent for some premises. That premises, for that premises, uses of premises, every month the company will pay some amount of money in terms of rent to the landlord. So that is called as rent. So that amount is an expenditure to the company. So every month he will pay. So that is a recurring in nature. So that's why this is an expenditure. So that's why this is entered into the profit and loss account as a debit side. And next one is office rent, and next one is to audit fees. What is meant by audit fees? Every company will be audited under the charter ICAI rules and regulations prescribed by the ICAI Act, and every company will be audited every year after completion of the financial year. The auditing statements, the auditor will be do the auditing for every year after the completion of the financial statement 31st March and for every financial year. So for that fees, the person we need to pay some amount of money. That amount of money here is called as fee. That fee is called as audit fee. So we need to pay this fee is to the chartered accountants. So for the purpose of by doing the audit statements as per Companies Act 1956. So every company will be audited under the Companies Act 1956. So that's why we need to pay some amount of money to the auditor. That auditor amount of money is called as audit fees. And the next one is whatever the amount discount allowed. If in case any amount or any for the purchase, for the selling of the any items, we are giving some amount of money to the in terms of discount to the customers. So that is the expenditure to the company, because we are providing some amount of money to the customers for the increasing of the sales. So that's why it is an expenditure to the any organizations or any company. So that's why it is an expenditure. So we will enter into the profit and loss account and debit side. So next we will enter into the same pro formas, that is interest paid. What is in by interest paid? Suppose for organization, for every organization will take some amount of money from the outside parties, that is called as debt or borrowings. For the debt or borrowings, the will pay some little bit amount of interest amount. Suppose for example, take the company will take 1 lakh rupees for as a principal amount. Then for 1 lakh for a period of 1 year, they need to pay 10% of interest, assume. So for the 10% of interest for 1 lakh is 10,000. The 10,000 rupees here we need to take under the profit and loss account as a debit side, because that is a expenditure to the every firm or every organization or every company. So this is the expenditure amount we will be enter into the debit side of the profit and loss account. And next one is to commission paid. So what is in by commission paid? So because for any advice, for any service purpose, we are approaching to the third parties for the advice for the resolution of the problem. Then the persons who are available to give some suggestions to the company, because of their suggestions the problem is resolved. So we need to pay certain amount of money to third parties, that here is called as commission. So that is the expenditure to the company. We will enter into the books of accounts in the profit and loss account as a debit side. So which means in profit and loss account consisting of all indirect expenses which are related to the office related expenses. Same like that, after entering all expenses are on income, we will get that if debit side is higher than the credit side, then we will get the net loss. So if credit side is higher than the debit side, then we will get the net profit. How we will get the net profit means if credit items are more than the if debit items, then in the scenario we will get the net profit. And how we will get the net loss means if debit side items are more than the credit side items, then we will get the net loss. After completion of this profit and loss account, we are moved to the balance sheet. So this is the final step to preparation of the final accounts, that is called as balance sheet. In balance sheet consisting of, balance sheet is nothing but it is a statement and it is consisting of liabilities. What is in by liability? So liability is nothing but that is borrowings, liabilities and amount, and next one consisting of assets. Assets is nothing but properties and amount. So this is a statement every company will be prepared. Why we need to prepare the balance sheet? So balance sheet is prepared to know the financial position of the every company or every organization, to know the financial position. That's why we need to prepare the balance sheet. And how the balance sheet is prepared, the liabilities, what are the liabilities are there for that company and what are the assets are there for that company, we need to disclose. And after that balance sheet, to the first step is liabilities. In that liabilities, first we need to write about that capital. What is in by capital? What is the initial amount is invested by the owner? That initial investment is called as capital. Here the capital, after completion of the profit and loss account, either the firm will get the net profit, then you need to add that net profit to the capital. If in case the firm will incur the net loss, then you need to minus the net loss from the capital. So if is there any drawings, then the drawings also will be minus or subtracted from the capital. So if the drawings are there, subtracted. So this is the pro forma. Once the final result is called as, we will discuss under the liabilities under capital amount. So what is in by drawings? Drawings is nothing but the amount or the money which will be used for the purpose of personal purpose, or that is called as drawings. So that's why the drawings will be subtracted from the capital. If the firm will in the net profit, then the net profit will be added to the capital. If the firm will be incur the net loss, then the net loss will be subtracted from the capital. After the capital, we will enter into the loans and current liabilities. What is in by loans and what is in by current liabilities? So loans is nothing but whatever the amount will be taken from the purpose to running of the business operations, the company or the every organization will take any amount from the any banks or anything. So that is called as loans. Loans is a liability, which means loans is a debt to the company. In future also the company will need to pay that amount to the that loan wala. So that is called as loans. And next one is current liabilities. So what is in by current liabilities? Current liabilities means the liabilities which can be cleared within a period of less than 12 months of time. That is called as current liabilities. So current liabilities, the best examples are bank overdraft. What is meant by bank overdraft? Overdraft is nothing but the benefit some of the banks will given some facility to the customers for the purpose of there is no amount in your savings account, but you need to utilize up to some amount of money. So that is called as bank overdraft facility. So this is the best example for the current liabilities. So once this is the pro forma for the preparation of the liabilities, and next one is assets. For the assets, first we need to talk about cash in hand. What is in by cash in hand? What is the amount will be left with the company after preparation of the financial statement? That amount is called as cash in hand. That cash in hand will be entered into the asset side of the balance sheet. And next one is cash at bank. So what is in by cash at bank means whatever the amount will be there available in the bank accounts of the company, that balance is called as a cash at bank. That bank balance is also disclosed in the asset side of the company. And next one is the fixed assets. What are the fixed assets to the company? So what are the fixed assets of the available to the company? The best example of fixed assets means the assets which cannot be changed and the period of more than 5 years, more than 1 year, and the minimum more than 1 year and the maximum is less than 20 years. That is called as fixed assets. Suppose for example, the best example for the fixed assets are buildings and land. So for this one, we need to enter in the books of accounts as a asset side. So these are the fixed assets. And next, after entering the fixed assets, we need to go for the current assets. What is in by current assets? Current assets is nothing but the assets which can be easily converted into within a period of 12 months of time. Those assets is called as current assets. There are some list of items are appeared in the current assets. The best example for the current assets are stock. What is in the stock? Stock is nothing but whatever the raw material or the finished good that is the called is our stock in the company. The stock will be available within the period of 12 months of time. After 12 months of time, the stock is not available. That's why it is shown under the current assets side. Why? Because current assets itself is telling that only less than period of 12 months, not more than period of 12 months. That's why the stock will cover under the current assets. And stock, and next one is prepaid expenses. What are the prepaid expenses are there to the company? Those expenses will be covered under the asset side of the balance sheet. Prepaid is nothing but before the starting of the work or process, we need to pay certain amount of money. So that is called as prepaid expenses. Suppose, for example, the company will take the rent for the purpose of office premises, for the purpose of office. Then before the rent, they are asking some amount in advance. So that is called as prepaid. So prepaid expense is also for the best example for the current assets. And next one is debtors. So what is in by debtors or sundry debtors is same. So debtors is nothing but the persons to whom the company is owned. That is called as debtors. Debtors is nothing but the customers. So this is also current assets. And next one is short-term investments. What is short-term investments? Short-term investment is nothing but same the period of less than 12 months. That is called as short-term investments. These investments will be covered under the current assets. So this is a pro forma to prepare for the final balance sheet. In that balance sheet consisting of liabilities, amount, assets, amount. After the preparation, the final result will be tallied or balanced or equal. Then only the company is in good, stable or financial position is very good. If the balance sheet is not tallied, means the company will incur, the financial position of the company will not be a good state, it will not be in good state, which means the financial position of the company is in bad position. So that's why this is the pro forma. So preparation of the financial statement. So already we discussed about the financial statements of format. So first steps are we discussed about that. First one is preparation of financial statements. The first step is called as trading account, and second step is called as profit and loss account, and third step is called as balance sheet. So now we will discuss about that same. So final accounts. So already final accounts is the last step of the every company or every organization to know the balances or to know the financial position of the company. We need to prepare the final accounts. In that final accounts, the steps are based on the trial balance only. We need to prepare the final accounts. I already discussed about the final accounts. The first step is trading account and profit and loss account and balance sheet. For the preparing of these two steps, then we will get the final accounts preparation is completed. So first, next one is the accounting cycle. I already discussed about the accounting cycle. Accounting cycle is first step is called as entry, that is journal, and second one is ledger, and third one is trial balance, and fourth one is financial statements. There the final accounts is classified divided into two parts. Here that one is called as trading account, and second one is profit and loss account and balance sheet. So here we will discuss about why we need to prepare the trading account. The trading account will be prepared for the purpose of manufacturing purpose and for the purpose of factory related expenses. That is called as trading account. So for why we need to prepare trading account means either you need to the firm or the organization will be earned either gross profit or gross loss. For the purpose of to calculation of gross profit or gross loss only we need to prepare that trading account. If how the gross profit will be earned, which means the credit side items will be more than the debit side items, then only the gross profit is erased. If debit side items are more than the credit side items, then only the net gross loss is erased. So this is the preparation of the trading account. And the next one is what is how the pro forma for the trading account is already discussed, right? The first particulars amount and particulars amount, and top of the debit side left side is called as debit, and credit side is called, and right side is called as a credit. And the first item is held opening stock and purchases and returns and direct expenses, and credit side is also called as sales and returns and closing stock, and whatever the this side is, if in case debit side is more comparing to the credit side, then here we need to end the gross loss. If in case here the credit side is more than debit side, then we here end the gross profit. Here I already discussed about the wages. Wages is nothing but we need to pay some amount of money for the daily workers daily basis. That is called as wages. They in trading account many direct expenses, almost direct expenses will be entered in the trading account at debit side. In credit side only that there are three items will appear, two items, one is sales and another one is closing stock. What is in by closing stock? Here the closing stock is nothing but whatever the stock will be left with the company after the preparation of the financial statements. That stock will be called as closing stock. This closing stock will be appear in the trading account credit side and as well as asset side, because this is the asset to the company. That's why it will be disclosed in the asset side of the company, which means closing stock will be appeared in the two times for the preparation of the financial state final accounts. One time is that is credit side of the trading account, and second time is called as in the asset side. And next why we here next the next step is called as profit and loss account. And next profit and loss account, why we need to prepare the profit and loss account? The after completion of the trading account, thus that gross profit or gross loss will carry forward to the next step, that is profit and loss account. The main purpose of profit and loss account to preparation is that is either the company or the firm will earn net profit or net loss. How will net profit? How will the company will get the net profit or net loss? Means suppose the profit and loss account consisting of all debit side, all indirect expenses, and credit side, all incomes, whatever the incomes will be received by the company, those incomes only will be covered under the profit and loss account. And next we will discuss about the profit. After completion of the profit and loss account, we will find that balance sheet. So under that balance sheet, we will be we will be discussed about that why we need to prepare the balance sheet. Why we need to prepare the balance sheet means, here the balance sheet will be prepared to know the financial position of the company only. We need to prepare here the final accounts consisting of, already discussed about the final accounts. In that final accounts, we need to tell about that, that is trading account and profit and loss account and balance sheet. Why we need to prepare the balance sheet means to know the financial position of the company, then only we need to prepare the balance sheet. So after preparation of the profit and loss account, either the firm or the company will earn the net profit or net loss, then the company will, that net profit will carry forward to the balance sheet. So this is the trading account, profit and loss account, balance sheet. Thank you for giving me this wonderful opportunity. Okay, thank you.